Good morning. I am Steve Weil with RMS Accounting, and today we have a presentation on PPP loan forgiveness, and we're going to also talk about some alternative programs. So, Steve Weil, RMS Accounting, we've been helping a lot of clients with this stuff, and if you're ready, we will get started. Just all right. So, we are ready to get started, and I am going to provide you all of these slides at the end of today's presentation. We'll give you a website you can go to. You can get the slides. You can get a lot of other great information that we have provided. You have to kind of forgive my wardrobe. I am a pre-Zoom meeting person, which means everything I own was not designed to be on a camera. It kind of moves around a little bit. So I'll stay in the little box and I'll try and give you all of the information that you've come for and answer all your questions. I want to thank you all for joining us today. I also want to let you know that if at the end of the presentation you'd like a free consultation, we're happy to sit down with anybody that has any questions and go over their questions and provide a free 1-hour consultation that might straighten some of this stuff out for you. All right, so let's talk about the agenda. We are going to talk about PPP loans. Those are the Paycheck Protection Program loans. We're going to talk about the EIDL, which are the or EIDL, excuse me, which are the Emergency Disaster Relief. I'm never going to get these initials right. We're also going to talk about how the PPP loans work, give you a little more understanding of that. We're going to talk about how your EIDL loan, if you got one, will affect your PPP loan and the forgiveness. We'll also cover some options if you didn't get either of these loans, some other payroll assistance programs that are out there. The object of all this stuff for the government has been to try and keep small businesses moving. I'm not sure that they've done that as well as they could have, and to keep people employed. So there's a lot of programs out there. We're also going to talk about the rules that are kind of written in pencil here. A lot of these things keep changing. They change all the time, and we've really had to keep track of it. Instructions change, rules change, how you go about things, and we think there's some more changes coming, as well as we're going to give you some just quick tips on business recovery if you hang around, and some of the things that we see that will help you hang out until things get better. I know none of us really needed curfews in addition to everything else that's gone on, and it just seems like we're as business people being slammed. So PPP loans are still available. The government has lots of money from the second funding that they have not given out yet. These loans are available through your bank, but you may find that your banker tells you they don't have this money available. And banks were given an allocation, especially the large banks went through it making large loans initially. That's what you saw on television to companies like Ruth's Chris, who had gotten these huge loans, not how it was intended. Some of them gave them back, but there is money out there, but your bank may not still be dealing with it. So smaller banks are certainly a better bet. Local and regional banks we found for PPP loans. American Express does PPP loans, believe it or not. There are loan brokers that do these. There is Quicken Loans does it, and there are a lot of small banks that still have money and are more than happy to help you with PPP loans. You need to make sure you do the application right, and unfortunately, although the application is quasi-standard, every bank looks at them a little differently and requires stuff a little differently. These things are guaranteed through the SBA. They're being funded by the government. The banks are getting paid for making these loans. They're getting a fee from the government for making these loans. But, every bank doesn't have the money. Every bank's not good at this. We've done probably about 8 of these for 8 different clients, all of which were funded, all of which wanted different information, all of which calculated a little bit differently. EIDL loans, there's still money there too. This is a program that's been around for a long time, originally dealt with hurricanes and other types of disasters like floods. but was revamped for this. They are still around. Unfortunately, they are direct from the SBA. And right now, I was just informed of this, went back to the website and looked, they should still be there. All the law is there that anybody should get them. But because Congress messed up and didn't include agricultural businesses in the original iteration, and they couldn't apply to this, when Congress fixed it and added the agricultural businesses, for some reason, the SBA saw fit to block out everybody but the agricultural businesses to allow them to get in line. So we expect that the EIDL loans will come back for everybody. Right now, you cannot apply on loan, and you do apply through the SBA's website. Keep your eyes peeled there, and hopefully they still have money. They're not going to, I don't think, use it all up with the agricultural businesses, and you may be able to apply for an EIDL loan or an EIDL loan. So anyway, one of the things that's caused the most concern, and I sit through a lot of legal seminars, unfortunately or fortunately, but every lawyer that has been talking about these things has spent huge amounts of time talking about the fact that borrowers must certify the loans are necessary. And what the heck does necessary mean? And are they going to come after you if you didn't really need, if you had money in the bank and didn't really need the loan? And how is that going to work? And we as accountants in many cases have argued that necessary means I have an unknown future and I don't know how much money I'm going to need, and I'm trying to be prepared, and that's smart business. There was a little bit of scare tactics here. Is the SBA going to come after people with these loans weren't necessary? And the SBA has finally answered that question in their guidance, and they've basically said, if the amount of the loan is under $2 million, we're going to deem that it was necessary and that you do need it and you took it in good faith, because small businesses always need capitalization and are going to be affected. So we don't have to worry about the necessary thing as much anymore. If you took a lot more than $2 million, you probably should have something supporting you needed the money, but that would seem to be a pretty easy thing to do for most people. If you're a publicly traded company or have unlimited loans, or you have large lines of credit, maybe not if you're very large, but the rest of us, it should not be a problem, and I wouldn't lose any sleep over that. So anyway, we have two kinds of loans basically here. We have the EIDL loan, okay, and we have the Paycheck Protection Loan. And the way the EIDL loans were supposed to work was that you went online and the SBA was going to be right on top of things, and they were going to fund up to $10,000 within 3 days of the application. It turned out not to work that way, and the $10,000 was going to be a grant to you if you didn't, well, it was going to be a grant to you even if you did not get the loan. So if you weren't approved for the loan, you'd still get to keep the $10,000. Now, in the real world, with no change from Congress, the SBA deemed that originally they did some of these $10,000, and they said, we're going through a lot of money really fast. We're going to allow $10,000 maximum up to $1,000 per employee. So if you had 5 employees, you'd get $5,000. If you had 50 employees, you could get the $10,000. If you had 10 employees, you could get the $10,000. But unfortunately, they didn't do it fast, because while they had a system already in place, unlike the banks when we come to the PPP program, the system already in place was designed for small regional disasters. A flood in a city, a hurricane. It was not designed to serve everybody across the whole country. Neither was the staff at the SBA. So what happened was we all put these EIDL applications in, many of us, and then we heard nothing. We didn't get as much as an email other than the confirmation that we had entered our information, and we heard nothing. And we sat around, and came time to apply for the PPP program, and the banks kind of, that was a work in progress. They didn't know what they were doing at first, but we applied, and one of the things they asked us is, did we get an EIDL loan? And the answer at the time was no, because we hadn't heard anything back. If you put in your application and did not hear anything yet, and did not get the 1,000, 10,000, however many employees you had grant, I'm going to tell you that is still going to happen. They're still processing those things. But, you know, there's a limit to the capacity here, and we have seen the grant come in for a number of clients. We've also then seen the clients be able to get the loans. They send you an email. You got to go back to their site. There's a little tab you got to move, and it tells you you're qualified for a loan from 0 to 100,000, or 0 to 200,000, or 0 to 5,000, and you move the little slider along until you decide what you want, and you finish the process, and you'll get the loan paperwork and the rest of the loan. This usually happens after you've seen some money deposited in your bank, but because you applied for this thing and you didn't get it yet, does not mean that you're not going to get something. You may, it just is not happening at the speed that it was intended to happen. So that being said, we also have the Paycheck Protection Loans. If anybody on this webinar have received a Paycheck Protection Loan, raise your little hand on the tabs for me if you've received a payroll protection loan. If you haven't, you can still apply. So I see one person, nobody else. Okay. Up, there we go. Okay, we're getting a few. So you can still apply for these loans. How much you get, it's a funny thing. It's a very easy formula. The formula is 2.5 times your monthly payroll, excluding any payroll for anybody that is over $100,000. That seems really simple. Unfortunately, in the scheme of things, every bank seems to use their calculation of 2.5 times the payroll amount differently, and some of them use what the payroll amount is. I saw American Express allow one of my clients to include took the entire payroll, divided it for the year, divided it by the number of months, multiplied by 2.5, and the principal of this company makes well over $1 million. They got a huge loan, but it's going to create problems down the line when we go to deal with forgiveness because they got money they shouldn't have gotten. So we need to understand that. We also need to understand that the EIDL loan, if you got that grant, is going to reduce the part of the Paycheck Protection Loan that is forgiven. These loans, as I say, come out of the SBA. The bad news is that any part of a PPP loan that's not forgiven, you only have 2 years to pay back. The interest rate is great. Its maximum is 4%. The interim rate was 1% that was published when these came out, but the maximum rate is 4%. But any part of it that's not forgiven, you're only going to have 2 years to pay back. Unlike the EIDL loan, which you can take up to 30 years to repay, and has a maximum rate of 3.75%. So that may sound like, oh, my client that got too much money, they're going to have to pay this back faster. But there is a provision that allows you to roll anything that's not forgiven in the PPP loan into an EIDL loan and use the 30-year payment. You just have to convert that, and that's really going to help you a lot if you're gotten too much money or you don't get the forgiveness. So, collateral, EIDL loans, if the loan's more than $25,000, they're going to take some collateral, but it's really going to be assets of the business, and they're not going to file a lien. So, if the loan, only loans over $200,000 need any kind of security interest that's actually filed, and there's no guarantee required by the proprietor or the owner of the business. They're made, the EIDL loans, by the SBA. That's really important. The Paycheck Protection Plan, there is no collateral required, regardless of the size of the loan. No personal guarantees required. Okay, They, however, if the business effort, you can't just run off the assets and not pay them back. But these loans are you don't have to personally guarantee them. You're not on the hook for them personally. So they're a great thing for some people. We own our building, so the fact that we're not guaranteeing it, we can't take the assets out. We have to pay it back. It's the business that's basically guaranteeing it. Not great for us, but if you're a small business without a lot of assets, this is a way for the owner not to get on the hook in case the things go bad and they're unable to pay the loans back and the business closes. You won't be personally held responsible for these things. So understanding the Paycheck Protection, these loans are intended to assist employers in continuing to write paychecks for their employees. So most of the money has to be spent on paying your employees. Amounts used for qualifying payroll during the qualifying period are going to be forgiven. So I get a $100,000 loan. If I meet the requirement, there's some requirements for the number of full-time equivalents. If I meet the requirement for using 75% of that for payroll, if I meet the requirement of not having reduced my payroll, I can get that loan forgiven, or at least the portion of the loan I used for payroll can be forgiven, maybe the entire loan, and I won't have to pay it back. Any part that's not forgiven, again, 24 months to pay it back unless I convert it. Forgiveness is conditioned on the full-time equivalent employees. So I had 20 employees during the period the comparable period. I have 18 employees now. That's going to reduce my forgiveness, but there are some safe harbors here. So, okay. So anyway, so when we talk about the loan amount being 2.5, and this should be an easy calculation, but I'm just telling you that every bank does it a little differently, comes up with different numbers, and you can't buy. My 6-year-old granddaughter can do 2.5 times something. Apparently bankers have an issue with it. Remember, a maximum of $8,333 a month for any one employee. That's the equivalent of $100,000. That Paycheck Protection Program doesn't protect amounts over $100,000, and that's per employee. Doesn't matter if they're part-time, doesn't matter if they're full-time. While the law says the amount can include benefits, none of the banks are putting this into the figure. So for forgiveness, it certainly can include the benefits and should, things like health insurance, but the banks aren't putting that in the figure when they calculate how much you're eligible for. You are going to need supporting documents, not only to get the loan, things like 941 showing your payroll, RT6s, your unemployment tax returns. Every bank's asking for different things. I've had some that want to actually see W-2s, but you're going to have supporting documents. You're also going to have supporting documents for how the money was spent when you go for forgiveness. So it's going to be important to keep your documentation. And I have a lot of clients that aren't really good about documentation. This is not the time to not be good. You're going to need that. You're certainly going to need documentation to get the loan, but you're also going to need it for forgiveness. All right. So Paycheck Protection loans, I've got this little chart for you, okay, and it gives you some information. They can include the things that get included are the wages, commissions, any kind of compensation under that $100,000 a year mark, even payment of cash tips if you're in the restaurant business. Payment for vacation or parental or family leave come into this thing. If you paid somebody a severance package, that can come into this. Any of these things, including group insurance, there's a lot of stuff that becomes part of payroll in these things. Currently, to get the forgiveness, you have to pay this money out for payroll, 75% of it, within 8 weeks of receiving the loan amount. And I say currently because Congress is playing with, the House has passed a bill that changes the 8 weeks to 24 weeks, and it changes the 75% for payroll to 60%. The Senate has a proposal, but has not passed anything, that changes the 8 weeks to 16 weeks. And we don't really know what's going to happen. So this could stay the 8 weeks. And if you got this loan, you need to have paid out 75% of the loan amount for payroll within 8 weeks. Not really a good thing for some people in the restaurant business and others who've been limited to 50% capacity. What are you going to do? Bring people back and have them sit around? You know, oh, I had to close my restaurants 3 nights because there was a curfew. We're not able. Are we going to just pay those people? What's going to happen? So hopefully the Senate is going to get together and do something with the House to extend this timeline. But as it stands right now, you have 8 weeks from the day you receive the money, or you have 8 weeks from the first payroll after. You can actually, they've made this a little easier. SBA has said if your payroll periods don't match the day you receive the money, you can use your payroll periods to determine this 8-week period. But keep your eyes peeled, and if you have any pull, let your senators know that they need to fix this so we have longer to deal with the money. You can pretty much go through what the funds can and can't be used for. You can use it for interest on your mortgage if your mortgage was in place, but you can't use PPP funds for interest on credit card debt. You can't use it for interest on mortgages taken out after February 14th. You can use it for rent, but you can't use it for rent on obligations. You can't have signed a lease shortly before or after you get the money, so you had to have your lease in place by February 15th. Okay, if you're a sole proprietor, you can still get this. So one of the questions I always get is, how do I include my independent contractors? And the answer is you don't. Your independent contractors are self-employed. They either have a business of some kind or they work for themselves. You've said that by making them an independent contractor. And while they're eligible for a PPP loan, it's not based on their salary or wages or even the compensation you paid to them. What they're eligible for would be the same as you for if they have employees, plus their net profit less half their Social Security, divided by 12 times 2.5. So if I'm an independent contractor and I'm one of those guys that has filed my tax return and taken every expense I could find and I never made any money, I'm not going to qualify for PPP money. If there was no profit, then my being out of business means I'm not losing any money that would compensate me because I didn't have any profit when I was operating. So this comes into play a lot of times with Uber drivers and others where the vehicle expenses were high, other expenses were high, and they did it for the cash flow, but they weren't netting a lot of income. Also, business startups that weren't making any money, this can come into play and hurt. But the rules are a little different, so we've got a chart here for you if you are a sole proprietor. Good news, the Paycheck Protection Forgiveness application is out. And while it is a little cryptic and a little bit difficult to understand, it's 11 pages, including the instructions, and you can find it on the SBA website. So we will provide a link on our website that I'm going to give you, but it is out. We don't expect this to be the last iteration. A, some of the instructions are a little hard to understand, and B, if the House and Senate get together and do something and the president signs it, it's going to change a lot of the calculations on this loan application. So you got 11 pages. The application does not have a due date. When do you have to file it? I don't have a clue, but you need to have it filed because it expires certainly before 10/31/2020. I would not, if I had met my 8 weeks right now, I might fill this out and try and figure out where I stand. But even if I didn't meet my 8 weeks, I would, or even if I did, I might be waiting and see, are there changes made to what's required and what's allowable, especially if my full amount wasn't going to be forgiven. Give them some time to update it, watch what Congress does, but we're going to need to fill these out eventually if we want to get forgiveness. The application makes it clear that the SBA is going to be auditing anybody that gets over $2 million. We think that's going to be automatic. It does not mean I got less than $2 million. They're not going to ask me to prove what I paid out in payroll and the expenses that I claimed for forgiveness and how it was calculated. So I don't expect to see a lot of the smaller loans being audited for this by the SBA, but I do expect to see a small sampling. We are, prepared to represent our clients when the question on these things come about. On the larger one, they've made it clear they're going to audit all of them. I don't know what the actual procedure is going to be on that or how they're going to have the manpower. I just know that they've made that announcement. These applications are complex. I sat with somebody yesterday that was complaining that they did not get a PPP loan, and when we looked at what they filled out, they said the wrong thing in 2 boxes on the application, and while they weren't told that, that's why it was denied. I don't know that we can go back to the same source. We're going to try another source for them, but it is often a good idea to get help. Ask your accountant for help. They should know how to do these things. If they don't, certainly we're more than happy to help you. Give us a call, but talk to people that know what they're, this is not just, it shouldn't just be a do-it-yourself exercise, because the trouble is it's easy when you understand it, but if you mess it up, it can mess you up and you can sometimes not get the funds. The same, by the way, is true with the forgiveness application. I would not recommend do it yourself. There are a bunch of calculations that you're going to see before you even get there to decide what the best periods are to use and how you're going to get the best result of these things. And if you don't get everything right, it just may come back to haunt you and you're not getting the forgiveness. So I certainly would look to somebody that's doing more than one of these things. And, once again, your accountant should be able to help. I know we are helping our clients with these things, and we recommend, I keep running into people, and you ask about the PPP loan they're waiting for, you ask about something, oh, my administrative assistant in my office is filling all that out. Well, they're not really the business owner. They don't really know all the information, and they're really not qualified. I mean, they're going in and answering the questions, but when there's a problem, there have been cases where it can't get straightened out. You can't unsay something. So just be thinking about that. Page 1 and 2 of the forgiveness document are instructions. So that should be, a fairly simple set of instructions. It's got definitions. It's not. It's a little cryptic. Page 3 and 4 are the loan forgiveness document. Like many forms, those of us that are tax practitioners know that when you start with tax forms, you usually start from the back and work your way to the front. Starting with the front page doesn't do you a lot of good. The same is true for page 3 and 4 here. There is a Schedule A you need to complete on page, with instructions on page 5 and the schedule on page 6, but you can't even do that until you read the instructions and do the Schedule A worksheet. Then they tell you what documents you need to submit to verify these things and have to be submitted. And there's my favorite, which is page 11, the voluntary disclosure. And one of the legal seminars I was in, the lawyer said, you don't have to worry about this. It's the voluntary disclosure. We're not going to fill that out. And my answer is there's a lot of voluntary things in the world, but I don't want anything to slow me down. It's not that much information. It's not that big a secret. On all of these that I prepare, I'm going to recommend that they do all of the voluntary disclosures. I don't want anybody to look and see there's a page missing or ask about information or decide they need something that was on an application that I did not provide. So if everybody's with me so far, I'm not going to spend a lot of time going through the actual application other than to show you you're going to be disclosing to them all the names of your employees, their social security numbers. You're going to be disclosing how much money compensation they receive. you're going to be disclosing whether they were a full-time equivalent or a part-time person, what a part-time person means in a full-time equivalent. We don't really know. We know that 40 hours or more, you're a full-time equivalent. We know that if you were less than 40 hours, you have a person less than 40 hours, you can figure out how many full-time equivalents using some kind of a consistent formula. Or you can count every part-time person that's under 40 hours as 0.5 or 1/2 full-time equivalents. That may be good and it may be bad. If you've got 10 people that work 10 hours a week, 0.5 is a lot more than than 10 hours would be. That's great. But if you have people that are working 30 hours, that's more, and you might want to get your full-time equivalent count. Depends on what's going to work best to make sure that you didn't lose full-time equivalent employees. And then we've got the salary and wage reduction, hourly reduction amounts. So you're going to go through and you're going to fill that all out. Employees over $100,000, we have a separate set of boxes on Schedule A that need to be done. There are some calculations for the safe harbor for full-time equivalents. While I'm here, let me talk a little bit about the safe harbor. But in the safe harbor, for this full-time equivalent, they have determined now that, for instance, if you let somebody go and you laid them off and you go to bring them back and they say to you, I'm not coming back because the unemployment is such a great deal right now and I don't want to work because I'm getting unemployment, or I don't want to work because I'm worried about the coronavirus or whatever, that if they refuse to return to work and you document that you offered them their position back, you will not be penalized for losing that full-time equivalent, okay? If you fire somebody for cause, not because we don't have the work, they're stealing, they're doing something that would be considered cause for firing them, that's not going to penalize your full-time equivalents. So there are some safe harbors here to kind of help and protect you from not doing it. So you're going to go through and do your computations on, carry them through to Schedule A, and you're going to do them from the worksheets. And here's some more information that you're going to need for the loan forgiveness. So here's the worksheet that goes through. Not going to spend a lot of time on this because I think it's going to change. Now we're back to the front page of this thing. So on the front page, there's some information you're going to need to get if you got a PPP loan and you don't have it from your banker. You're going to need to know the SBA loan number. Probably didn't get that when they sent you everything. So you're going to need to know that. You're going to need to know the lender's PPP loan number. You should know, God willing, the PPP loan amount and what date you received the money on. So that's the date it was dispersed and came to your account. So those are things you're going to have to get and going to have. You're going to need to know employees at the time of the loan application. So there's a whole bunch of other, you're going to tell them your payroll schedule, and you're going to fill this out. I really do recommend that you get help with it because there's a lot of stuff here, and as I will show you, a lot of calculations that need to be dealt with. Now, really important is that you understand there are certifications on this thing too. So you're signing off on that you understand if the funds were knowingly used for unauthorized purposes, the federal government may pursue recovery and or civil and criminal charges. So you can't say I used it for payroll and didn't. You got a problem. You understand that that could happen, okay? And they tell you here that you understand that if you make any false statements for forgiveness of this, that you could end up with prison time or up to a fine of $1 million. Not really a good thing. I just want you to understand why you want to know what you're agreeing to and where the numbers came from on these things so you get stuff in the right places, and why you probably don't want a secretary filling this thing out for you, or an administrative assistant, or somebody that doesn't deal with this kind of thing. Not that we've all dealt with it for a long time because it's new, but you need somebody that understands what you're getting into and can explain it to you and make sure you get the right answers. All right. So there's some keys to maximizing the amount of forgiveness. Okay? You need to maintain the same amount of full-time equivalent employees. As I've told you, there's no real definition, but 40 hours means I'm a full-time equivalent. I get a 1. Part-time, I can either get based on a percentage. Oh, okay, add up the number of hours of part-time people, divide by 40. Or let's use the 0.5 per employee. You have to be consistent. You cannot choose one method to determine the before the disaster number of employees and a different method to determine the after. Whatever you choose must be consistent. It's one of the reasons I find this complicated, because I, for my clients, run a number of formulas to find out which one is going to be best for them overall. So that's really important. Let's see. You need to pick the comparison period. So as the law stands right now, the comparison period can be June 15th, 2019 to June 30th, 2019, or January 1st, 2020 to February 29th, 2020. Those are the periods before that we're going to compare to. We have the same amount of payroll and the same number of full-time equivalents for. Seasonal employers, they don't have as many choices where they have to go. Again, typically we're running 2 sets of calculations. We're running both periods and see which gives us the best result for our clients. And what do we have here? Oh, right. The FTE reductions, positions, you have to make a good faith written offer to rehire the people. So I offered Jim to rehire him. My attorneys went round and round when we did seminars with the attorneys. Well, you got to get the employee to sign off they're rejecting the offer. That I do not believe is the case. You know, I would send the offer with a negative confirmation. If you don't report for work on Monday, we're going to assume that you have elected not to return to work. And I would put that in my written notice, but you do need to make some kind of a written offer to bring people back in order to, if they don't come back, not have them hurt you. Any employees who during the covered or the alternative period were fired for cause, again, they do not count against you. If they voluntarily resigned, I've had enough of this, I'm not coming back, I refuse to work anymore. Or if they voluntarily requested a reduction in their hours. My kids are at home, I got to take care of them, I can work less. I would tell you that you want to document this as much as possible. I don't believe that you're going to get employees to sign they're not coming back to work, especially because it could affect their unemployment. I don't believe that you're going to but at least have emailed them, have something in writing saying, okay, this is to confirm that you have voluntarily resigned effective such and such a date. If you don't have it, great, you might make a memo to the file or something that documents it, just so you have some kind of documentation. If you can refill those positions, but you don't necessarily have to. Okay, so we've kind of told you the safe harbor, and I'm not going to spend a lot of time on that, but you are going to get all of these slides. So what I am going to show you is that this is, as you can see, this is tab 1 of a 4-tab Excel spreadsheet that we put together to figure out when the best period are. It's not even the complete tab 1, it goes over to the side. I just want you to get an idea here that, you know, we're checking the compensation and the number of hours during period 1, which is that February 15th, 2019 to June 30th, 2019. We're checking it for the period 2 that we could choose from, and then we're doing the payroll periods for the loan. So this is not just an easy thing, because we don't, on the application, I don't need all of these calculations. I just need the better set. Well, how do I know the better set of calculations if I don't do it all both ways? You don't. And you know, then we have the rest of it here. As I say, I'm not going to bore you and go through all of the ones. But like the application finishes, this is one of those. This is the first page of the actual application without the names and such. We have the payroll costs. And then we have very little mortgage interest for this, but more the interest on your mortgage only, not the principal payment. So if you have a mortgage that's almost paid off, like this person did, it's going to be relatively small. If you have a large mortgage with a lot of interest, it's going to be a larger number. The utilities. Now, people keep asking me, is internet a utility? I think it is, because I can't turn off people's internet because they tell me I'm subject to utilities rules when we have cable and that type of thing. But we don't really know for sure. But electric, water, sewage, garbage, all of your utilities, because those can count towards your forgiveness. When we get down here, we're also then going to figure out, this comes through from the other one of the worksheets, how many of the full-time equivalent employees we have. We've got a total amount, and we have to reduce that total amount of these things by what we're under 100% of equivalent employees. So we're relatively 5%. We're multiplying it by 0.9534. That means that the total is 146,589. Our PPP loan in this case was 144,900. And if we take that amount of the PPP loan, or excuse me, the payroll amount, and because we have to be 75%, they want to know what's 125%, or excuse me, yep, and weird calculation here. And then you get the smaller. So I only got 144,000 for this person. They're going to get forgiven $144,900. As we move on, good news, bad news about these things. The good news is, according to Congress, when they enacted this thing, amounts that are forgiven, loans are never taxable to you, but forgiveness of debt generally is under the tax code. But amounts of PPP loans that are forgiven, you do not have to pay back, will not be included in your taxable income like normal debt forgiveness. And it seems to me that Congress intended that you wouldn't have to include this as income, but they never mentioned the expenses paid with this money. And the IRS has determined that if you don't pay for something with your money, then you don't get to deduct something. And they have lots of history of this where somebody pays for somebody else's expenses and they don't get to deduct it. And they, in Notice 2020-32, have come along and said, that's great, but if you take your PPP loan and $144,000 is forgiven because it's used for payroll or other things, you can't deduct that payroll or other things expense that you used the forgiven money to pay for. I do not believe that this is really what Congress intended, but this is what the IRS has come along and said. The question is, how much do you want to fight them? There are going to be people with these loans that determine that they're going to deduct these expenses, and they're going to take the fight to tax court, maybe to the Supreme Court. For most of you, that is not an expense you want to bear. You are not going to deduct these expenses, but you may reserve a right of claim if one of these other people fights the case, and we find out later we can go back and amend this and take the expenses we didn't take. We don't know what's going to happen. I am hopeful that Congress will speak up here and say, wait a minute, we intended to give these people a leg up, and while we intend it may help them out, we still want them to be able to take the tax deduction for the expenses, but I'm not holding my breath here, and neither should you. So the answer is it's a net zero. You didn't take it into income, and you're not going to get to deduct the expenses unless something different comes about. This is very much like the Wild West. You know, Congress put something together, a bunch of agency geeks tried to determine what does it really mean. The president tweets something, somebody tries to figure out, is that in the law or not? And then you and I and lots of small business people have to figure out, how does it really affect me? and are these rules right, and do we have, you know, are we going to wait for new rules and what's going on? It's just been, as fast as I research and get things done, things come up. I checked this morning, there's not an update to the application, but who knows what'll be this afternoon. And it certainly will be once the Senate and the House have gotten together and figured out something. EIDL loans, if you got the grant portion, not the loan for a minute, let's talk about the $1,000 an employee or $10,000 as it was originally, but not to exceed $10,000. You got that money, you don't have to pay it back. It is going to reduce the amount of PPP loan forgiveness you get. So if I had $150,000 eligible for forgiveness before the EIDL grants figured in, I'm now only going to get $140,000 forgiven because the $10,000 was a grant. It wasn't taxable to me, but it's going to reduce what can be forgiven. So need to understand that. PPP loans, again, remember, anything that's not forgiven, you got 24 months to pay it back, but you can convert it into an EIDL loan, which is one of the reasons, if you think you're going to have a problem there, when you get that little slider, you might want to at least take some, even if you don't need all of the EIDL loan, take some so it makes the conversion easier. You're already kind of in bed with the SBA, have the loan set up, and you can roll your money in. Take a look at that. You know, the bad news is EIDL, other than the $10,000 grant, you are going to have to pay back. Okay? The only way to not pay it back is to cease business operations and in effect have and not have the assets to liquidate it. You're not personally on the hook, but you're going to have to pay it back, unlike the PPP loan, which hopefully, if you've planned right, most or all will be forgiven. Other options. So if you didn't get either of these loans, or they're not the right option for you, okay? Employee retention credit. There's an employee retention credit, a tax credit for 50% of the wages paid after March 12th and before January 1, 2021 for contra-virus relief. You can get this money advanced to you because your 941 taxes probably aren't going to, just offsetting them isn't going to cover it, by filing Form 7200, and they'll literally advance you the money to cover this half of the payroll. You reduce what you pay in the 941 taxes. So that's a great way to go. And there are people that, because this is a longer period, you're probably not eligible for this. We're fighting that right now. If you got a PPP loan, you're certainly not eligible to duplicate the amounts that are forgiven. But there are some people that are just going to be better off with this longer tax credit against their payroll taxes and against their payroll. If you're an employer and you owe payroll taxes and none of this stuff works for you, but you need operating capital, you can also delay making your payroll tax payments. And this is not going to give you any money down the road. You're going to have to pay this stuff, but it allows you to defer the payroll tax payments until the end of the year, and then you're going to have to come up with the money. I am not recommending this strategy to most of my clients because while they'll have more cash now, I don't see them at the end of the year being able to double up and more, especially with everything going on in the economy. We're coming down to the end here. Quick tips for businesses. Let your customers know you need their help. Small business is doing this much better than large. Went to Best Buy the other day and basically got told that I could make an appointment to come there and shop, and there were none available today. Does that make me want to shop at Best Buy? No. Most of the restaurants and things I'm going back to, which are small, the owners and employees are telling me, thanks for coming back. We appreciate your business. We need your help. But if you let your customers know that you need their help, they need to send you their friends, their relatives, you're going to get that help. Adding new services. They may or may not add to your revenue, but they may help bring in. Tropical Acres here, their butcher is there. You know, they butchered steaks so that you could grill them. You know, they could grill them and sell them to you in the restaurant. Well, they're they put their butcher to work and they're selling meat to get people in and to create a new stream of revenue. I was at my favorite little breakfast place the other day, Tower Deli, and he's got a table out in front with toilet paper and paper towels. 99 cents for a roll of toilet paper, $1.99 for paper towels. Do I think he's going to be able to make his nut on paper towels and toilet paper? No, but he's letting his customers know that if you can't get this, I can help you out. I have it here. He's getting it from the commercial supplier, not the grocery store people. And it lets people know he's doing a little bit extra for them. And if you need toilet paper and can't find it anywhere, or paper towels, you might decide to either pick up your breakfast or eat breakfast in at Tower Deli. So there's stuff that you can do. Look at what your product line is and how you work with it, and figure out what can your business do to be profitable. In addition, you need to look at your expenses. Eliminate unnecessary. I tell clients this all the time. Check your bank statements. There's all these recurring things that you signed up for that you don't even know what they are anymore. The being able to check a phone number on the internet, getting an email address, all sorts of things that bill you every month. They're generally small amounts, but they add up and they go on forever. Reduce your inventory as much as possible. That's money sitting on the shelf. So you may look at, carrying items that are more saleable. Eliminate or reduce advertising programs that don't show measurable results, that you don't have a way to track or aren't showing results. Outsource bookkeeping and payroll services. We found a lot of people are paying a lot more for those services by having somebody in-house, and they're not really getting what they need. There's oftentimes you can outsource that, and you take a full-time person that costs you a lot less than that to have somebody do it. It becomes a lot cleaner. You also get rid of the accounting when you do that. Speak to your landlord. I am a landlord, so I hate this one about some kind of a temporary credit to reduce your rent. Landlords know right now that it is not going to be fun to fill up the space. Okay, they're going to have more space than they know what to do with, and some money coming in, especially with the hope of it going back to the current rent down the way. Some temporary relief might be forthcoming to keep tenants in place. Reduce employee hours after you've figured through your PPP loan. Eliminate overtime. We've worked really hard to eliminate the overtime. We've kept everybody full-time employed through this whole thing, but we're not wanting to pay a lot of overtime right now. Watch your accounts payable. Businesses that were strong may not be. So don't let anybody get into you for more than you can afford to lose. And remember that just because my credit was great last year and my ability to pay was great, doesn't mean it's going to be great in the future, and you don't want to be on that train. And stay on top of people to get the payments. You want to be the squeaky wheel. All right, so we're getting right to the end here, and we're close to on time. Okay, don't react, anticipate. It's important for you to be thinking about what's going to happen. It's too late when the bank account runs dry to decide you're going to cut your expenses, or you're going to deal with your receivables, or you're going to file for one of these loan requests, because they're not going to be fast. You need to anticipate your need. I've been arguing that with the lawyers that told me, do you really have necessity? And the fact that I have cash in the bank when they closed everything on the planet does not mean that I don't foresee the necessity to have money 3 months, 6 months, a year down the line, and that it's going to be a necessity for me to conserve cash and to use these kinds of things and to protect my business. So anticipate what's going to happen. Try to take a look at it. No one ever thought we were going to have coronavirus followed by curfews, but what can I tell you? As I've already told you a little bit, but we added breaking news. The House did pass a change which would make that 8 weeks 24 weeks. I don't know that we're going to get any more funding because of it, but it would certainly change how the forgiveness works. It would also reduce the amount you have to pay from 75% to 60%. The Senate has not acted yet, although there is a bill that doesn't do the 24 weeks, it does 16. All that stuff's got to come together at some point before the president can sign it. So there are things still developing. We're still waiting to find out what's going to happen, and we will keep you abreast. We post these things on our website at the COVID-19. There's a little tab at the top, and you can certainly go there. I want to thank you all for showing up. I'll be happy to take any more questions after, but let me give you some resources to start out with. This gives you the SBA's website, the IRS's website. We've given you the our website, as well as, very important, where you go to get all the handouts, including some other information from this seminar. That's www.rms, Richard Mary Stephen, accounting, accounting.com/PPP loan webinar handouts /. That is a hidden page. You will not find a link to it on our website. It is only available to those that attend our seminars. With that said, we've covered everything I wanted to cover today. And if you do have questions, as I say, we would be more than happy if you just mention you were on this webinar to provide you with a free 1-hour consultation. If you are not currently a client, bring your tax return and your information, some other information with. We can do these by Zoom. And if you are a client, of course, you know that you can call us anytime and we will assist you. And if we don't have the answer, we'll endeavor to find it. Thanks again for attending.